Hi everybody, this is Paul Cooper with Totes and Notes, and it's currently December 8th, 2018, and I'm bringing you a Market Meltdown, the first one in quite a while. As I've mentioned, I've been incredibly busy. We're currently getting ready to close on probably over a dozen properties in Jackson, Mississippi. I've got to get some stuff done for some other non-performing stuff, so we're really busy at the end of the year, getting a lot of stuff done. It's very exciting. But I wanted to take a few minutes and try to knock out a market meltdown real quick since there are a lot of things going on that we've been talking about for the past few months. Now, this first article here is on Zero Hedge, and it's talking about the Yellow Vest movement in France and Paris. So it's been going on for maybe a little over a month, a few weeks now, and it's basically they're protesting. There's been a fairly large increase in taxes on petroleum, and it's due to their, I guess, for lack of a better word, kind of a carbon tax, or for to help curb climate change. And yeah, it's not going over well at all. There are a few other factors going on as well, just the cost of living in general. There's been a lot of bad things going on in the schools there for a long time. They've really been needing some reform, and so there's pretty popular. I don't know if it's in this on this article, but there's a really popular picture now that's been circling the past few days of hundreds of high school kids that were arrested. Basically, they're being a little dramatic, saying they're held like they're about to be executed because they're making them get down on their knees. But they didn't have guns pointed at them. But it's a pretty big deal. Just tons of rioting. I think they mobilized several tens of thousands of police for this weekend for all the riots, and yeah, it's not going very well at all. So this a big economic thing? No, but it is tied into the economy a little bit because this is what can happen when things start to go bad economically, when people are losing their jobs, when the cost of living is outrageous, and there are other things that need some reform, and people just, or the politicians, ignore them. So we're moving on to our next article over here. This article here is talking about some theories about why the economy is turning and what's causing it. Because most people are like, oh well, jobless claims are low, unemployment is very low, and this first part here talks about how that ties into the economy. How when you hit a really low for unemployment, it can be tied into a period where it's about to swing up. And that's just kind of a historical thing. It's a correlation. It's not really a causation. But what we get down to here are some other stuff. It's talking about, the auto manufacturing sector and housing sectors are breaking down. We've been talking about that for a while, how housing's been cooling, home builders been slowing down prices, slowing down unless you're just in the hottest of markets. And then, earlier this week we had that huge, 3% drop in one day, so a lot of stuff going on, and yeah. Then this part down here is talking about the widening trade gap. I mean, this has been going on for, 2, 3 decades now with China, the imports from China and exports to China. Trump's been trying really hard to implement tariffs. He calls himself the head tariff guy. But generally tariffs in a free economy aren't going to help that much. They're going to stymie what's actually going on and what you want, because they're more retaliatory in nature. For our third article, we've got this very appropriate article called "It Can't Go On Forever," and it's Bob Schiller questions America's gigantic housing boom. Kind of some of the same stuff we've been covering for a while now. We're once again experiencing one of the greatest housing booms. Here we go here. Data shows that this is the third biggest housing boom in the modern era, and since February 2012, when the last financial crisis ended, prices for existing homes in the U.S. have steadily risen, and by a fairly enormous amount. And then here we go, right here. So a whole house that sold for $200,000 in 2012 would generally bring about $300,000 in September, so up almost a 40% increase during this period of 6 years. I mean, that's just insane. It's well beyond the consumer price index for inflation. And then further in this article, it talks about the number one boom occurred from 97 to '06 when the real prices of existing homes rose 74%, intense speculative enthusiasm. And, we're seeing that again. You got all the TV shows, how to flip this house and everything like that. Real estate started becoming a buzzword again. People were getting into it. Same with the stock market. Oh, all news is good news and causing the stock market to increase. And so when people are like, oh, you can't lose, then that's generally when people start losing, when all the dumb money floods in. You go look at Bitcoin. I mean, it's done horrible this past year. There was a pretty interesting article, I don't have it pulled up, earlier this week about this guy that made this $1 million bet that on some options for Bitcoin, that Bitcoin would be like at $20,000 or $50,000, just some obscene amount, and now it's not even close. So all of his options are expiring worthless. Just some insane appreciation on some of these assets. All right, on this next article, it's talking about the global financial markets and just how volatility is up just drastically in all the major markets. We had that 3% drop, and that's pretty much what this article is just talking about, just how the volatility on a daily average is just skyrocketed. And it shows the Russell 2000, NASDAQ, and some, we've got France, the UK, and some other countries here, Deutsche Bank. And just the volatility and the trends that's going on for them is just really bizarre and to the extreme. And this will be our last article from Zero Hedge, and it's the Everything Bubble Has Popped. I like this article because it's not super technical, it's kind of theoretical. And what it is it's talking about how most of the major economies, the ECB and the Fed, are trying to basically deflate the bubble away, and it's probably not going to happen. Everyone always looks to see what the bubble was that caused the event, or what the what was the pin that caused the bubble to finally pop, and they look for that in the future and in the past. But really, I think what this article does a very good job is it says it doesn't matter what the pin is that causes the bubble to burst. The issue is the bubble. If you don't have the bubble, then nothing unforeseen can burst it because everything should be sound. And it's talking about the greed and fear in economy, and you always kind of get this. People are greedy when they should be fearful, and vice versa. And then we've been attempting to replace the business cycle with a credit cycle. So you have all this cheap credit out there to try to get the economy going, to keep it going. And so that's kind of how it's fueled a lot of the stock market being propped up with nothing really supporting it. So a lot of stock prices over these past couple of years have increased due to company buying back their own stock. And that's not making the company more profitable. It's not like they designed a new product or service that's making them money. They're just creating a scarcity of the stock, so it's causing the price to go up, which really is just, it's kind of faux economics. It's not really improving the company. The company's supposedly worth more now, but they just use cheap debt to go buy their own stock to prop the stock price up. All right, our next article is from Housing Wire, and it's talking about Wells Fargo to pay $17 million to Illinois pension funds over crisis-era mortgage bonds. I've spoken in the past about Wells Fargo, and absolutely nothing good. They were stealing from some family members of mine, creating false accounts. Obviously they did it a bunch to have to constantly be paying the government millions of dollars in penalties for this. I honestly don't know how they've stayed in business and why they're allowed to stay in business. I've spoken very harshly about them in the past. There are a lot of people that still love them and want to use them, and they're great for a lot of businesses, I guess. I just don't know how you could do business with a company that has been proven to have just a culture of theft and stealing and not caring about people. But yeah, so here's Illinois. Illinois, as a state, has got a horrible problem with their pension. Their taxes are just crazy right now because they're trying to make up for all these pension shortfalls, and they happen to be a victim of Wells Fargo. So, and our last article on Housing Wire is home appreciation is slowing down. We've been talking about this for a while, but yeah, when the housing markets slow down, then you're not going to see as much appreciation because there's not as much demand for the products in the market. So equity's still climbing, but appreciation is slowing down. Yeah, and it's going to be really bad for the people that are buying homes now with brand new loans, since interest rates are increasing. and we're probably at the top of a market, whether it's in the next 6 months, a year, or 2 years, or however long it takes. We're probably going to see a fairly significant drop in most markets for the prices. So these people are going to be getting in it with higher interest rates, and what little equity they had from their down payment and maybe paying for a year before it drops is going to vanish pretty quick um, when there's a significant housing market drop. So they'll be stuck in their homes and won't be able to refinance. Um, Residential, I mean, that stinks bad for those people, especially if they needed to sell or they're counting on using that equity in their home um, in some way, doing a reverse mortgage or a HELOC or something to help them get by or to pay for other expenses. But where it's really going to hurt is the commercial side of not, well, housing, but just commercial real estate in general. Because with commercial, you could be paying, and if you lose the equity due to the value, they can still foreclose on you in a lot of cases. And so, you could be paying on that warehouse for however long, for a few years, and then you see a 30% drop in commercial, and that eats up all your equity, and now the bank could come in and be trying to take that property from you, even though you're paying. So that's where it's going to get really interesting. We're probably going to see a huge crash in commercial prices. I mean, commercial's been slowing down. Pretty much everything except multifamily or Class A retail is has been slowing down the past few years, but we're probably going to see a huge drop on that. Well, anyways, that's all we're going to discuss for this market meltdown. Hopefully, I'll be back to making these every week soon. Um, Probably won't do one. I may not do another one until the beginning of next year, but hopefully, I'll have something out for you. But like I said earlier, I'm closing on a bunch of deals shortly before the end of the year. So I'm definitely going to be doing videos on those once they close, because right now I can't disclose anything to the general public. There's some private stuff in there. So the only way to really see that now is if you're already on the investor list and or you're investing in one of those assets. But I'll have some good stuff in the future on it. I took several hours worth of video while I was in Jackson looking at all the properties. I'll have deal breakdowns and go through the math and things like that. So if you have any questions, don't hesitate to reach out to me, and hopefully I'll have something for you guys here shortly.